What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be taking a quick look at our broad market, notably some monthly charts there now that the January bars have closed. We'll look at our core list of companies that we're always watching, and this week I've got 5 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. As always, anything we are associated with is linked down below in the description of this video, so check that stuff out, and without further ado, let's jump right into the charts. So kicking things off on the SPY monthly chart, looking at candle structure and location as we always do. For structure, we certainly have a hammer candle, but we can't ignore the fact that yes, indeed, the body is in fact red. So the buyers stepped up, right, at the lows and obviously pushed prices a little bit higher, but they were only really able to close back up towards 50% of the entire month's range. Now, it's not incredibly bullish or it's not incredibly bearish either. Instead, what I think we can start to look for here is the possibility, at least, for a bit of a trading range to develop in the earlier stages of 2022. I mean, this bar is fairly volatile, and if we get something like this into 2022, just trade sideways in a range, it wouldn't strike me as surprising per se. If we think back to other instances where this has occurred in the past, and we're only looking at a brief history in here, notice that we set a fairly large bar for its time back there in the earlier stages of 2018, excuse me, and then from there we traded sideways in a range, and then ultimately went on to continue the uptrend. But maybe that's the case for in here. Again, no guarantees, just something I'm thinking about. The last time we had a candle that was similar in structure was from the sickness crash back in here, and we all know sort of what happened there with unlimited quantitative easing. Obviously, that's not the case this time around. This isn't quote unquote a market crash that we have here, and there's no sort of big catalyst to spur that. I also just want to briefly go out. Let's go to like 20 years, and I'll show you some other instances of protracted bear market, or actually not. Before we get to bear markets, right? Here's 2015, another similar hammer-ish type candle. Notice how we trade sideways in a range there. If we continue on further, here's another one. After a little bit more of a bearish marketplace in the first place, it's not really like we traded sideways in this range, but it did take a couple of months to get up and over those highs, obviously. So there's that. Here's the protracted bear market of 08, obviously the housing crisis. I'm not saying we get anything like that. We're not in a current market environment that would really support something like this, I don't think. There's really no, the lending practices now are obviously much, much better. Regardless, that's a little bit too fundamental of a take for the sake of this video. I'm just going to illustrate here that, it's fairly rare that we see a ton of monthly red bars stacking in a row as we've been on this bull run. Now, obviously, things are subject to change over time, and there's no guarantees of what the future may hold, but I'm starting to think that there is a possibility of kind of a sideways to neutral market over the course of the year, right? We've set a fairly large range up here. There was a ton of volatility, right? So I wouldn't be surprised if we get a little bit of ping pong back and forth in the earlier stages of 2022. Those are just some of my thoughts from the monthly perspective. I mean, wouldn't it be something if we just built out a beautiful monthly bull flag, of course, and then over the course of time, we start to crack it to the upside and the uptrend can continue from there. Just some things I'm thinking about from the monthly perspective. Let's continue on lower, talk about the weekly, of course. In terms of our structure and location, we sort of have the opposite, right? Sure, it is a green-bodied candle, but we do have a larger upper wick, inverted hammer. If you were to smash the 2 weeks worth of range back to back, we would simply have an indecision doji, right? Our body would look something like that. We would have an upper wick that would look like that and a lower wick that would look like that. So a little bit of indecision here around the 50 SMA. It's not to guarantee one direction or another. It's just exactly what I've called it, indecision, right? One interesting thing about the weekly is that we are resisting at this area, right? We talked about this in last week's video, the fact that this is sort of the make or break area. Are we going to form a weekly lower high and then reattempt the lows? Or are we going to break through it and then start making our way towards the highs in here? As of right now, the weekly would suggest with this upper wick that maybe we do see a little bit more of a pullback. But let's continue to dive down a little bit further here and talk about the daily and, of course, some tradable levels into the upcoming week. So zooming in, what you'll notice is that we have a perfect rejection off of the resistance trend line set from the all-time high, first lower high, and now again, there's that sort of weekly lower high that we've seen there. One thing I want to point out here is that on Wednesday, right, we did recapture this all-important area, the big flush point around 450s, and now we're back down underneath it. We have sort of 2 days worth of balance, and we are rejecting at that area here. It looked like it was going to be a fairly strong close on Friday, but obviously in the last couple of minutes there, the last, maybe the last hour or so, we retraced some of it and closed back down underneath that 450 area here, that big, prior flush point. That was kind of the big line in the sand for saying, okay, maybe we're going to start flipping the script to being a little bit more bullish. As of right now, the downtrend is still in effect, and it's leaving us in a little bit of a tricky spot. Remember that to the downside, I've been harping on and on about the top end of the balance here at 443.50 being the line in the sand. It's also the daily 200 SMA right now, which is fairly interesting. But as long as we're above that level, then I would watch for this to be maybe a higher low from here to here, of course, and then another attempt at the resistance trendline could be the one to break it more firmly, get us to the daily 50 SMA, this 460 quarter level, and then after that, again, maybe it's a move back towards those weekly highs, and we play ping pong from there. That's the bull case scenario. Another reason why I bring up the bullish scenario here is if we take out the Fibonacci's from the low of the move here to the high of the move, notice that we're sitting right at the 38.2, right? So this is nothing more than a healthy pullback in the sense of this overall move. So that's one possibility here. I like it so far, and that's supporting the upside. If we remove that, let's talk about downside, because if this does break down, then what do we have, right? A look above and fail. As we know, the target should be the bottom end of the range from in here roughly, the 4-day balance lows around 428.50. There's one possibility that we do set a higher low around 437, and let me flip to a 30-minute chart so you can see this here. The reason I'm calling that level is because that's kind of where we stopped, right? We gap down underneath it. In here, we find support, and then it's resistant before the breakout, which led to higher. So to me, 437 is really the last line in the sand. Ideally, I don't want it to see the S&Ps underneath 443.50, but if it does happen, that's the last line of defense. If that doesn't hold, then I would imagine that the downside does continue and we move along on our merry way. Back on over to the daily time frame chart, I do want to point out some things with our sectors, just because this is going to help us navigate what's going on here. If I expand this a little bit, so you'll notice that the XLY, consumer discretionary, financials, energy, and tech are all sort of at the top of our list. Even communications there is at the top of the list. All of those minus the energy sector, of course, and maybe even... actually, I would say all of those are fairly aggressive sectors, right? Those are some risk-on sectors, and to see those green on the Friday there is fairly promising. Let's quickly take a quick glance at some of the charts here. And again, the same thing in the XLK. This pullback here is well above the 38.2. As long as it forms a higher low and reattempts that 164, I think that pulls the S&P marketplace much higher. If it falls back apart, we know that the breakdown point is here, 156. If that goes, obviously it's not going to be so good for your S&P 500. However, as of right now, the pullback is completely healthy. Nothing about this chart is screaming, hey, watch out, look out below, right? The other thing we can read into is the XLF. This chart looks fantastic, moving back above this area right here. You can clearly see we closed closer to the highs than more aggressively pulling back into the end of the day as compared to the S&P 500 as a whole. So to me, that's a positive sign. Again, the chart does look fairly good. You can start to think of this as the beginning of a little bull flag breakout right here. You could also look at it as a double bottom. There's your neckline around 39.25. We're moving away from it. The target should be up here, closer to 40.75, 41-ish, and then after that all-time high, obviously. So the big sectors are, pulling fairly nicely to the upside. The next one that should really go and be an upside catalyst for our S&P 500 is really the XLY, consumer discretionaries. If we can break out up and over this pressure cooker top, it's essentially the equivalent of the balance that we've seen in the S&P 500. If we can take that out and move to this prior shelf right around here, let's call it 193 roughly. Again, that's going to be a positive driver for your S&P 500, and it's a more growth-oriented sector. So to me, that would be a little bit more of a risk-on signal. So those are some things that I'm looking at behind the curtains for our S&P 500 into the upcoming week. The last thing I'll point out is our market profile. And what I want to point out here is just something to be keeping an eye on. If the market is going to make a turn higher, we want to continue to see value, which is this highlighted yellow portion right here, continue to either be overlapping. We don't want to see it break away to the downside. So the one big concern was the fact that from Wednesday into Thursday, value was breakaway to the downside instead of being more overlapping to down, but we did save ourselves on Friday, right? You can clearly see that value is more overlapping to slightly down as opposed to breakaway to the downside. That's what we want to avoid to sort of, negate the opportunity for the sellers to really run away and break back down underneath that big balance point that we've been talking about in the S&Ps. Let me just illustrate where that is one more time right here. Okay, so 443.50. As long as we continue to see overlapping value in here, I think it builds the case that any sort of moves back down underneath are going to be a fake out. We return to where value is, and then maybe there's a push higher, noting that that could build the case for a higher low. So those are my big thoughts in the S&P 500 marketplace now that we've wrapped up the month of January and we're headed into February. Again, one step at a time here, but that's what I'm thinking about. Let's continue along and talk about the QQQ. Going back out to a monthly time frame, we'll do the same top-down analysis here. You'll notice that the monthly bar of January is a little bit more bearish. We were not able to retrace quite to 50%. I'd say 50% was really a little bit higher than where we closed. Nonetheless, if we do something like this, you can see we are respecting this prior breakout point as support. Would have been ideal if we held on to these candle lows. Again, same thing that I wanted to mention in the S&P 500. Generally speaking, red does not last long on the monthly time frame charts here. I know we've been in a bull market for the past, however many years here. It's not like we really have a bearish market in the QQQ and tech sector. Here's 2008, again, really spurred by the housing crash and poor credit, lending practices. I don't think we're in a market environment that supports something like this. Instead, again, I think that the case for sideways may be a little bit stronger, right? Here's one of those bars, very similar. We go sideways for a couple of months, then it resolves higher. Here's a couple more, sideways for a couple months, then it resolves higher. Here's another one, right? Here's a big move. We get more sideways activity, and then it resolves higher. So that's really what I think the marketplace may be in store for here. We know that this is the sickness crash back there, and obviously with unlimited QE, sent the market on a straight shot to the upside. So I wouldn't be surprised to see a big bull flag form on our monthlies, a little bit more sideways activity, and maybe a break into the future if everything's still all well and good here with the United States market. So longer term thoughts on the monthly, drilling it down to the weekly here, same sort of deal with the S&P 500. Notice that we did not make it to even back test this area, but we do have the inverted hammer indicating some selling pressure here. You could start to think of this also, a weak close back down underneath that level, back down underneath the 50 SMA. A little bit more bearish here in tech, no doubt about it. Obviously, the line in the sand will be the lows from the prior week, and that's really clear on the daily time frame chart. So let's just go down to it now. We'll break out our levels. There we go. Couple things I want to point out here. We've already tested the breakout point from our prior area of balance. We're testing it. We need to make sure we stay above it. That's 354 roughly. We're just going to round off for round numbers' sake. We have 2 days of back-to-back balance. Again, value is sort of overlapping to, it's really just sideways essentially. It's not dramatically lower here in the QQQ, which is a good thing. Now we, of course, have to break back into the gap and fill that overhead. That's from 362 roughly up to 364.50. After that, it's this area that's really still going to be the thorn in the side of the QQQ around 369. Remember that it was the first lower low that broke our flush point here. And then when we break it to the downside, it's where the selling really accelerates. That's where we rejected on Wednesday, right, for the rollover into the end of the week. So to me, 369 is the must beat area in the QQQ. If this is going to be the higher low, then boom, it's got to be a reattempt and go higher at this level, or potentially something like this, another higher low pullback. We start to build a bit of an ascending triangle against that level, and then maybe it breaks into the future. If that doesn't happen, if we break back down underneath that 354 level, the all-important support to the downside, 2-day lows essentially, then watch out below, probably a rotation down to this 341.82, and then Monday's low will be in play after that. If that is going to happen, we'll reassess the charts once that unfolds, and it depends, right? If we make one big red candle that slams down here, I would likely watch for a quick little bounce first, and then maybe any lower highs to break it. If we slowly mosey on down there over time, that's a completely different story. So one thing at a time here. The other thing I would say is that we have a fake break currently of this resistance trend line right here. And also, if we take out the Fibonacci's from the low of the move up to the high of the move, notice that we violated the 38.2. We're still sitting right on the 50%, which again, our line in the sand is always the 61.8. Generally speaking, candle closes underneath that dramatically increase the odds of a 100% retracement. We haven't done that yet, but I'm just going to illustrate the relative weakness here, the fact that we have already crossed below the 38.2 from a Fibonacci perspective. So that's what I've got for you in the QQQ in terms of levels and thoughts in terms of relative strength and weakness. Let's go ahead and take a quick look at the IWM here. here, going back out to a monthly time frame. And of course, we are breaking down outside of this bull flag on the monthly. We did not even come close for a retest of the bottom end in here. The candle certainly closed the weakest of all of the 3 indexes that we've seen so far. Volume is increasing on this sell side move. Doesn't look fantastic, right? So that's IWM from the monthly perspective. This one, let's actually grab some more time here and do the same thing that we've been doing just to keep it consistent. You'll notice that the sort of when we get bear markets in IWM, so small caps in general, right? This is fairly early on in the ETF's days. We're not really going to read into that. This, of course, is that '08 crash. We'll sort of leave that out as an anomaly. Notice how it takes a little bit longer for these small caps to recover, right? So you get this move lower, it goes sideways, and then takes a while to cross that high once again. Same thing here, moves lower, kind of goes sideways, takes a while, and then it crosses those highs once again. If we go in here, big area of sideways action. In here, move lower, takes a while to cross those highs once again. All I'm getting at with the IWM is don't be surprised if this one lags to just magically make it up towards those highs and continue on its merry way. Like this by itself was sort of a miracle for small caps, and this breakdown right here may be signaling, at least to me, that we're probably in store for at least a year based on what we've seen in the past, right? Look at this leg right here, right? It took a little while for this to resolve. It looked like it was just going to go sideways in here. Obviously, the sickness happened and we went dramatically lower, but it's not like it just rebounded quick and easy up to those highs, right? With the unlimited QE, sure, that did happen, but I don't think that this is just going to magically do something like that. That's all I'm getting at in the small caps here. Be a little bit more patient with these guys. Let's continue on down to the weekly, see what else we can learn. Again, not nearly as bullish as any of the other charts we've looked at. 2 equal highs, inverted hammer on the weekly session here, closing inside of the range of the prior week's bar. Just not looking fantastic from a bullish perspective. To the daily, let's go ahead and pop on those levels. What we'll notice here, the big sort of obvious thing to talk about is the fact that it never broke out of its consolidation, right? The QQQ and the SPY, they certainly went higher up and over that sort of consolidation high zone. The IWM certainly did not. 2 days kind of in the midpoint of the range, right? If we were to draw something like this, we know that our edge never really exists in the midpoint. It's literally at the edges for either a breakout or mean reversion. Same thing at the bottom, mean reversion or a breakdown. As of right now, I'm just not seeing it in the IWM. There's no reason to be pushing your luck in the midpoint of this range right now. I don't think we have direction. I think we just have a ton of volatility, and in the midpoint, I just don't think it's worth taking your shot. If we do something like this, then sure, we have a higher low, reattempting the top end. Maybe there's a breakout point here. We know that 208 is the all-important backtest area. That's the low end of the year-long consolidation that we were stuck in prior, so that would be the first target, and then I would seriously reevaluate the chart when and if we get there. If that doesn't happen, right, if we just kind of go sideways in here, maybe do this, maybe you take a stab long down here with a tight stop under here, looking for a rotation back to the top end of the range. That's probably how I would start to think about IWM. I wouldn't really be pushing my luck in the midpoint here, as I've sort of been hammering home. There's no reason to really bring out the Fibonacci's. I suppose we could come in from this low up to this high. Again, you'll notice that we're closing right at the 38.2. The lower wick went through the 50%. It's not completely bearish. It's not like we've been closing candle bars underneath the 61.8, but hopefully you've gotten the sense so far that IWM is probably just not the place to be making trades right now. There's much better setups in our SPY and our QQQ. So that's really going to round out our broad market. Let's get into these companies. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every time a new video comes out. Kicking off our companies here with Apple, fantastic relative strength, forming this beautiful bull flag here on the daily time frame. We discussed the fact that it recaptured this all-important level around 168. We're respecting currently at least the 50 SMA. So to me, nothing more than healthy consolidation in this range. The next critical thing to break is going to be this overhead resistance from the lower high, also where the flag sort of topped out here. You could even start to think of it like this, right? Inverted head and shoulders as long as we pull back, support at 168, reattempt in here. Chart looks fantastic for higher, right? So to me, the target would be 181, roughly these all-time highs, and then blue sky territories, whole and half dollars, intraday levels that do form. You could even start thinking about a measured move in terms of pattern. Generally, when an inverted head and shoulders or regular head and shoulders breaks, you look for the measurement from the neckline to the head, and then you stack that on top of the neckline, the breakout point, which would roughly take us up around 190. Again, a little bit optimistic of a target there. I'm not saying we get there in the blink of an eye. I'm just saying over the course of time, it certainly could be on the table. As I've pointed out, 168 is the critical line of defense to the downside. Want to see higher lows form off of that. If it breaks down, that's what we have up next. Obviously, the consolidation highs around 164 quarter. Let's move along and talk about Netflix. Obviously, this one's been quite interesting with the whole Ackman acquisition, 31 million shares, so on and so forth. Obviously, it pumped on the news, but pulling back aggressively. The one thing I find interesting about this is the hammer candle that printed on Friday. The chart's kind of odd. Let me expand this, make it a little bit easier to see on your screens here. There we go. That's looking a little bit better. So primarily what I would start thinking about is, okay, can we take out the hammer candle high? If so, first target's here, right? We have 4 data points around this 427 area, we'll call it. That's the first target. That would be, obviously a long-sided trade. Then you monitor for continuation. I'd probably take off half the position here, another quarter of the position here, if it moves higher in the first place, right? You're trailing your stop up the whole way as this is unfolding. And of course, the last quarter, you're seeing if we can get some continuation into the rest of the gap overhead. That would be like in an ideal world. Obviously, charts tend not to act in ideal fashions, but that's just what I would think about here in terms of Netflix. Stop loss in this case would go underneath the low of Friday, or for a more conservative trader, because you're looking for more of that aggressive move to the upside, you could put it below the gap, right? So giving it a little bit of wiggle room, where if it wants to come down and fill that downside gap and then continue higher to fill the gap above, you're giving yourself that breathing room, right? So stop would go under there. That's one way to trade it. The other way to trade it would be, okay, I'm going to be more patient. I'm going to see if we can produce another higher low, so something that looks like this, and then you're just looking for the break into the gap overhead. That's from 457, let's call it 458 round number, up to 507, again, another round number there. That's the more conservative trade, right? This one's fairly aggressive if you take the break of the hammer candle high, but, to each their own. There's unlimited ways to play things in the market. So that's what I would think about there to the long side. If this is going to roll over and never take out that high, just kind of go sideways in here, I would just watch out for the bear flag scenario breakdowns, probably take us through the gap into the lows of the earnings announcement. Don't get me wrong, there's plenty of deltas in here. We're talking about a fairly large Y axis that's about 40 points in there. So day trades, absolutely, there's plenty of room in there to go long and short, but from a directional bias, I would use this gap as sort of your pivot. As long as we're above, I would start to favor longs, maybe getting back up into the gap overhead. If we start accepting down underneath, I would start favoring shorts, looking for the lows of the earnings conundrum, we'll call it, for a lack of a better term. So that's Netflix. Let's move along, talk about Tesla here. I love this setup happening in Tesla, and the reason being is that on a smaller time frame, this is definitely starting to become an inverted head and shoulders, big neckline right here. We've recaptured 900. Remember that was such an important area. Not only was it prior all-time highs, we had this bounce point from in here. So that's been recaptured, right? Beautiful move on the Thursday and even Friday sessions with bull flags getting us back up and over that number. The next breakout is here. We're starting to break the resistance trend line sideways through time. It's not the most bullish indication, but it's also telling us that the downtrend is softening, right? So to me, breakouts up and over 943 roughly take us for the backtest of 1,000, and that's a big area on the chart that you've got to reevaluate. I'm not entirely certain how and if we'll get there, but I do know if we get there in the first place, I'm definitely on high alert for any sort of inverted hammers that print, any indecision dojis, basically things that would make you question the strength of the buyers at that level. I want to know about it, right? So I'm definitely watching Tesla for that specific move right there, and then we'll reevaluate at 1,000. If it really wants to play with some momentum here, 1065 is the next number. We've talked about that one intensively over the past couple of really months, really the earlier parts of January. You get the gist. Any breakdowns back down underneath 900, I would be careful. I wouldn't get overly short here, just noting the pattern, right? So that inverted head and shoulders that we discussed, I would probably be patient in this range. And sure, don't get me wrong, day trades are fine in there. It's a $100 range. Play around as much as you want, back and forth, shorts, longs, whatever, but I wouldn't push it to the downside until we get a more bearish pattern that unfolds, maybe an overall H pattern, something that looks like this, and a larger breakdown of 800. Again, not seeing that right now, but that's what I would be patient for if you're intent on playing this one short. Next up, we have Alibaba. And zooming in on this guy, stuck in the middle of the range, right? If I do something like this, here's your midpoint. I'm not really seeing direction overly clear here. We are bouncing off the low end, up towards the high end. Maybe you could start to call this a bit of a bull flag. I'm not a huge fan of that just because the structure isn't, clean, really. It was just kind of a sideways grind lower-ish here. The buyers made an attempt each day to take it higher, but they really just got nowhere. For me, the next breakout to the upside is up and over the high of the flag, closer to 130 for the rotation to the resistance trend line. If it's a short, it's it's probably, honestly, I'm not even seeing the short. Like, where would you enter and where would your stop go? I'm not really seeing the reason to short here. Looking for, again, we have this sort of intermediate support around 115, 116, and then the lows around 110. Maybe that's in play with a stop over these highs. I'm just not seeing it. And again, being in the middle of the range, I don't like it in terms of location here. So I'd probably put Alibaba on ice and wait for a better setup here. Next up, we have Facebook. Obviously, a massive earnings conundrum on our hands. Massive gap down. Okay, so the gap is still in full effect from 316.89 down to 240. Let's call it 248 just for round numbers sake. A little bit of a sideways doji on Friday. It looked fairly promising to close out as a hammer candle. We were watching that in the Discord, but unfortunately, we do have a bit of an upper wick here on the close. So to me, probably a patience play at this point in time. I was waiting to see if we got the hammer. Maybe it's long early on in the week over the highs to fill the gap overhead. But with this indecision here, I'm going to start to be a little bit more cautious and probably wait for a move up and over that 248 again area just to start working our way into the gap. This prior structure at 266 is coming from, if I scrunch up the chart way far in the past, you can see clear sets of highs in there. The next level we have is half gap. So it's halfway between here to here. That's the next target. That's 282.30. And then, of course, these structural lows around 293.45. I'm not saying that this happens over the course of the week. That would be an insane move inside of Facebook. Those are just the levels I'm paying attention to. To the downside, if we were to take out Friday's low around 230.50s, what do we have underneath us? Let's grab some more time here and search for a target together. So 5 years out, yeah, that's going to be plenty of time. What do we have? So there is support. This is actually fairly interesting, right? Right underneath us, about $7 lower, 223.30. We have this breakout point or, well, resistance from in the past. And when we break it, look at how perfectly it holds as support. Let me zoom in on that a little bit here. You can see clear shelf of support there, fake break, and then it was off to the races, right? So to me, that's the next level to the downside. If it wants to continue to get beat up into this upcoming week, we'll see. One step at a time, but given the oversold nature, I can't really imagine that it just wants to free fall any further. It is always a possibility, but to me, I would be patient and probably look for this type of setup in Facebook into the upcoming week. Next up, we have NVIDIA. And we're going to zoom in here. Earnings still a little bit further out on this one. Not a huge deal right now. Let's actually go back down to a yearly so we're not lagging for data. There we go. This one's kind of a little bit tougher to play as well. We have the sort of double bottom here, right? Our neckline did break. We're getting the break and retest. So it's all a question of can we take out the Friday high and then rotate back into this high in here, make something that's, oops, whoa, I don't know what's going on there. Let's get back over to the current price action. There we go. So apologies for that. So anyways, there's your double bottom break and retest. We know that. If we can get the break of this kind of flag in here, that's where I would start targeting the resistance trend line, and that is probably going to act as resistance on the first test, right? We haven't tested that in quite some time, so to me, the first interaction that we're going to get with it after it's been a fairly long time should provide some resistance. You would look for a pullback, and then the question is, do we form a higher low, or do we continue like significantly lower and get back down into this kind of range in here? So NVIDIA, probably, again, the setup's not abundantly clear. I like the fact that we have a green candle that's starting to print off the back test of the double bottom neckline, the break and retest area. Now it's just, can we get the follow through, right? So if you wanted to go long early on in the week, that's fine. Stop loss has to go here, and your target has to at least be an equal high to 257.68, and then the resistance trend line. After that, it's sort of all about, and this could coincide for super resistance depending on time of week with the resistance trend line there, 272.25, right? Why is that the level? Big support from in the past. If we can recapture it, it starts to shift the tone inside of NVIDIA. So that's what I'm seeing to the long side. If it's a break back down underneath, we know that this is a look above and fail. Target should be the bottom end of the double bottom range, closer to 219.50. Anything underneath that daily support trend line is in play, could be close to 210 depending on time of week. Next up, we have Microsoft. Zooming in on this guy a little bit. I like the sort of idea that maybe this starts to build out as an inverted head and shoulders. Not the cleanest pattern, but definitely something worth paying attention to. There's kind of your neckline. And as you'll notice, it's just a recapture essentially of 311. If that can happen, then fine. 50 SMA would probably be my target here, and 318, just like in our SPY and the QQQ, there's the flush point. As we start breaking down underneath it, really rejecting it on that back test right here, that's where the selling accelerates, right? So to me, 318, critical target after after 311. Again, a nice $7 move available there. And then the 50 SMA, right? That could be even a little bit higher depending on when and if this does pan out. After that, 330. I'm not saying we get there. That does look like a little bit of a stretch into this upcoming week, but that's what I'm thinking about. If we take out the 2-day lows, so from Thursday and Friday, all about the daily 200 SMA and this area of support from a couple weeks ago, it's 2 weeks ago now, around 293.50s. If that breaks, look at the lack of structure in here all the way down towards that sort of infamous Monday low that we set now 2 weeks ago, closer to 275. The lack of structure in there is a little bit concerning, so I would really hate to see Microsoft start breaking down underneath that 293.50s, but if it does happen, be prepared to play some downside in there because, with the poor structure, we could probably make that move fairly quickly, and that's really, when that acceleration is happening in your inputs, that's where the delta and gamma really pair up to start, accelerating the premium, essentially, of your contracts, right? Because the gamma is speeding up as delta is speeding up, implied volatility is speeding up, all of that's going into your options pricing. So that, could be interesting there, but I would prefer to start looking at this again as the inverted head and shoulders opportunity, as long as it holds on to roughly $300 here inside of Microsoft. Let's round out our companies with Amazon, of course. What a wild ride this one has been. Big gap down with the Facebook sort of sympathy play here, and then taking it all back on its own earnings into the Friday session. A little bit of indecision, right? So to me, probably a patience play. It's either up and over the high of Friday or down and out under the low to start to fill the gap underneath. That's 30.14 down to 28.85. That's the gap fill underneath, by the way. If that does happen, I would probably watch for something like this. Maybe there's a higher low there, right? Something that starts to do that, and then we start the hook higher. Could be the start of a bigger reversal inside of Amazon. I do want to remind you roughly, if I go back out to like a weekly, remember that here is our range. We're back inside. So maybe, just maybe, this is not a guarantee at all, this is a look below and fail. Target now becomes the top end of the range. It's a possibility, right? We are looking at a weekly time frame chart, so this could take a long time to pan out, but that is what the pattern may suggest, as long as any higher low pullbacks start to respect that area that we just discussed, right? Top of the gap. Let's go back down to the daily, discuss that one more time. So anything that does this, fantastic. Higher low, and we have the look below and fail in play. Target, technically speaking, over the course of time, again, don't get willy-nilly greedy on me. It's probably not going to do that over the course of a week, but target is up there closer to that 37.65 area. And that's what I've got inside of Amazon, right? We talked about downside gap fill. We talked about upside as long as it holds for a higher low pullback. Got to retest that high of Friday, then one step at a time, right? 33.35, 3,500, one step at a time. So that's our companies in a nutshell. Let's get into these 5 trade ideas. Let's jump right through these trade ideas. I don't want to take up any more of your Sunday night. NLOK is fairly straightforward. We have this big resistance trend line that's been in effect. Catalyst on Friday takes us right to it. Close at it. I'm watching for any higher low pullbacks, reattempts here for longs to get us up towards those all-time highs. Let me throw that on with a horizontal level. We're looking at roughly 29. We'll call it just for round numbers sake. And again, higher low pullbacks, fantastic. We'll quickly take a look at the Fibonacci's and discuss where a higher low pullback would be acceptable. Anything that roughly holds 26.85 starts to look good to me for that potential. And also make pretend with me for just a second here, right? If you extend this line to the left, it's the prior highs from in here as well. So fantastic. Bull flag forms in this area, looking for continuation, not interested if we start to retrace any more than that area right there, 26.85 roughly. BA is the next one up on our list, and zooming in here, it's just a simple 4-day balance. You can see we have highs and lows stacking. Longs up and over 208.82 to get us closer to this area here, 225. Again, I'm not saying that we immediately get there over the course of 1 day, 2 days even, but look at the structure on the way down. Fairly lackluster, right? Or excuse me, not lackluster, but lacking in terms of structure. It's really before that. Maybe there's a bump in the road around 117. That's the upside there. And to the downside, if we were to take out the lows of this consolidation, I would just imagine that the big shelf of support closer to 187, 188-ish area is back in place. So being patient, willing to play either direction here inside of Boeing. Just keep in mind that airlines aren't like the exciting thing to be trading right now. It's really kind of all about tech. So be careful and just be a little bit more aggressive in terms of profit taking if the breakout does unfold to the upside. Next up, we have Coinbase. Obviously, with the sort of Bitcoin rally over the course of the weekend and it's holding, I would expect that maybe this has the potential to gap up over the course of the weekend into Monday. We'll see, but I'm looking for a break of this pressure cooker top. If not, around 195.50. If we open on a gap up and we do some sort of pullback, it's got to hold that area. And then we're looking for reversals back higher to fill this gap from in the past. If not, just continue on higher into this area right here, coming from prior structure, right? Support, then turns to resistance closer to roughly 240. That's the upside case here inside of Coinbase. If it wants to fall back down underneath that breakout point, probably not interested unless it wants to respect this higher low that we have currently around 178.12. So just something that looks like this. If it respects it, fine, maybe continuation into the future, but it would probably require some other type of setup. Just looking at this because Bitcoin has been strong over the weekend. Next up, we have Abbott. ABT is the ticker, another 3 days of consolidation, very similar to what we have in Boeing. If we take out the highs, looking at this prior area of structure around 134. If we take out the lows, looking for a range double, right? So traditionally, we would look for that range to double. It's also prior support from right around in here, 125.36. So open to either direction, especially with a sort of indecision doji on Friday's session. Sure, the green bars are stacking. You could be a little bit more bullish because of that. But overall, I wouldn't be overly biased whenever you have consolidation like this. Be open to either direction, otherwise you might miss the move. Next up, we have ADP to round out our list, and this one's simply going to be a pressure cooker top into a gap above. You can see clearly stacking highs. We have a higher low that formed on Friday around 202.50s. As long as we can consolidate further in this range and continuously put in higher lows, putting more pressure on the breakout point at 208, looking for that to go and essentially close the gap up towards that daily 200 SMA around 212.65. So about a $4 move available on the breakout to the upside here. Not interested if we can never break it out or if we start producing lower lows underneath that 202.50. So those were our 5 trade ideas in a nutshell here. If you enjoyed this week's video, let me know down below in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked down below in the description where we do 10 to 12 video ideas every single day. That's not week, that's every single day. And with all of that being said, I wish you a green trading week.